Hi traders. In today's video, we will deal with a timeframe spectrum using one of my favorite pairs. I like XAU USD, or in other words, gold USD, so much, not only because it's gold but from the personality of the pair. It has moves, it has volume, it has power, it has them all. I backtest strategies for a long time and never forget to test them to gold too. Some of the strategies shout from far away. When you apply them and see the reds appear everywhere, the strategy is full of lactose. It can't be digested from the pair. Other times like this one, you see the green one so often that you think it's Christmas. Using the same strategy we had in our previous two videos, the 0.26 and 0.25, the channel breakout from TradingView, my eyes flipped to full-blown green. I tried to use more and more timeframes to tell you, okay, sorry, it didn't work in that timeframe. However, every timeframe won the right to be presented here. I use the standard 22 timeframes I use myself for my strategies. These are the 1 month, 1 week, 1 day, 12 hours, 8, 6, 4, 3, 2, 1 hour, 30 minutes, 15, 10, 5, 4, 3, 2, 1 minute, and went even further, 30 seconds, 15 seconds, 5 seconds, 1 second, which is practically tick data. I will make a separate video regarding timeframes because I see a complete mess in the trader's head about them. So today we don't have a backtesting video, as you will see later in the video. We have a catwalk with the equity curves to pop your eyes out. I will not say much about the strategy because I did mention enough in the previous two videos that we applied the same strategy to cryptos and forex. This category is indices and metals. The settings you can apply to the strategy to get these results will be presented at the end. With a screenshot you can pause and see what is the time frame you're interested in. Just enjoy the show. We will start with the older models and we will end with the young ones. Welcome to the Gold Channel Breakout Show 2022. I have the honor to present you the first model, the 1 month. As you see, this model has 13 only closed trades, low enough, but these are the data. In such big time frames, the deep history doesn't give us additional benefits because with 20,000 months we will have the prices of gold from the Maya and the Aztecs. We continue with our next model, the 1 week. 1 week follows the same stiff pattern of the month and 11 closed trades, something you should be cautious about. Let's move to our most popular model, the 1 day. Now we see the runaways smell fire. Total closed trades are more than 100 and the profit factor is normal. The equity curve is good, but I will show you even better. This is our 12 hours model. A little better than the 1 day and more trades. Now in the runaway, the 8 hours, more trades as you see, and the curve doesn't touch the drawdown line so much. This one is our 6 hours, which is very similar to 8 hours, but the closed trades are increasing. We now see the 4 hours with a great number of closed trades. Watch out for the value of average trade. I will talk about it in the lower timeframes. We drop to 3 hours and you continue to watch the show of nice rising and trouble-free equity curves. Now the 2 hours boost even more, even the profit factor drops, but we see a clear detachment of drawdown at the top right. The 1 hour we see here is even better at the drawdown, and the pattern of this beauty continues. We enter the minutes section and the first one is the 30 minutes. 81.48 closed trades, what a number, but this is not the biggest we have. Now the 15 minutes is a standard time frame with a somehow lower profit factor. I always say that I like to have at least 1.20, but this is for 10,764 trades. The 10 minutes model we see now has a bigger average trade number but a bigger drawdown. We're in the position to present you with the 5 minutes model with 41,540 trades. Do you think it can get better? You see in front of you the 4 minutes and the curve starts to look even more round. The 3 minutes you see in front of you are also round. The 2 minutes start to increase the stakes even more. We arrived at the end of the normal trading universe. The 1 minute. If you notice a slight change in the resolution of the image is because my main browser crashed and put a dedicated computer with a smaller screen. Now from here, the territory is uncharted. We see the 30 seconds with very good data, but one secret, the average trade. This one is the 15 seconds. Equally good, but with the same secret. Before we end with the absolute low time frame, we see the 5 seconds. Thank you for being in our show. The last model is the 1 second with barely profitable profit factor and 0.01 average trade size. Now, let me explain why I put the seconds. I didn't put them to open your appetite for trading them. I put them to see the dynamic of the strategy. The 5,000 US dollars that is the order size I use is around 0.05 lots. Each 0.01 lot for a raw popular broker account has a 0.07 charge. So 5 of them cost 35 cents. The average trade of 1 minute is 47 cents, but there may be a spread too. That's why low time frames are dangerous. I don't use commission calculation in my backtesting the time I do the backtesting. Using the extracted data, I put the exact settings of my broker. That is what you should do too. Every broker has different charges and they do play a role in low time frames. Let's go to the spreadsheet screenshot with all the settings and time frames together. At first glance, you see a small sea of numbers and a few cells marked with red color by me. From my point of view, I see each row like a morning show. It speaks to me. Let me explain. Each row has advantages and disadvantages. It's calling you to select that time frame because it's the best, but you have the bigger picture and you can take better decisions. Your role is to be able to weigh the benefits based on your personal criteria. I will go into detail in future videos as long as I see subscribers interested in it, because for now, I see only 118. Just an example, if you have a low budget, you're interested in the drawdown. If you are a low time frame scalper, you should have an average cost of the trade from your broker and compare it with the average trade size. If you don't trade with a bot, you can't touch the time frames lower than an hour unless you have already a computer of Elon Musk embedded in your brain. If you count on compound interest, then you need enough trades with at least a medium profit factor. Widen your horizon. Trading is not a secret. People that have some kind of interest try to fog your view and think of it as a mountain in front of you. Calm down and think you have all the money in the world. That money is no issue. What would you do if you had this scenario? Feel this scenario with a demo account. Bust your account and go and reload it. TradingView has already a paper trading option if you don't want a demo account from a broker. Count the times you busted the account and how much money you lost. Act as they were real, but you had plenty and don't care. Take and feel the responsibilities but also the freedom of a pro trader, even if you are a virtual pro trader with paper trading. Feel the confidence by doing things again and again and again. Trading is not a switch. On or off. Yesterday I didn't have this fantastic strategy. Now I found it and I'll send Bezos and Musk live in the caves. Okay, let's return to reality. In general, you see that playing with the settings can make a simple trading strategy a real money printing machine. If you trash the greed, the easy and fast money, then you will start to make major improvements to the best profession in the world, in my opinion, the one of the professional trader. If you have anything to say or suggestions for the current strategies or strategies you want to test, do let me know in the comments. Remember, finding an edge to your trading and applying proper risk management and psychology is the recipe for success. Thanks for your time. Sincerely, the trading elephant himself.